Hey, welcome back to Everything Money. We're glad you joined us again. This is Seth, Paul, and Mo. We know that you watch us all over the world, and we're very thankful, Paul. With our meager beginnings just a few years ago with so few viewers and subscribers, it was laughable. We have 60x'd since last November, and if we just meager 10x from here on out, we'll have a huge community, which we already do have with our patrons. And one of our patrons, a hilarious patron, Matty J.
Oh, this is him?
This Matty J sent us this. Now, look, folks, we've done reaction videos in the past. Some are lovingly. Jimmy, you know I love you. Sven, you know I love you. And some are brutal. Stockmo can suck it. Meet Kevin, the bullshit artist that he is. Andrei Jikh, his sidekick, another bullshit artist. And today we're looking at this reaction.
So wait,
video.
This isn't Matt J's video.
No, he sent this to us.
Okay, got it.
Our patrons refer us to some of his videos. The YouTube channel is called How Money Works.
Oh, I like that name.
And the title of the video is The Growing Problem with Personal Finance YouTube Influencers, Paul.
So far, I'm in love.
So far, so good.
Is it possible? Okay.
I mean,
listen,
I
want to skip ahead.
This is blind. This is not that long of a video, Paul. So just take this in. Mo, I'd like to get your thoughts too. You ready?
Okay.
I have some bad news for you. You are probably not going to be rich. Not a particularly positive message to start a video on, but it's something that people need to hear from time to time. Unfortunately, this is not something that most people want to hear.
So most people sign releases.
There is no shortage of people out there telling you exactly the opposite, only as a way to pitch
There's
some
our
kind of
boy.
product. Now, of course, most of you watching know that YouTube ads saying that you can earn 6 figures a month by selling on Amazon, Forex trading, or flipping real estate are full of shit. But they still all follow a pretty similar routine. Hey, you can get rich.
It's true.
As long as you are willing to do XYZ while listening to the advice I give you. Again, when it turns out that this advice is something that you have to pay for, most people get wise to the fact that it's all just a massive scam. Of course, some don't, which is tragic, and there really genuinely should be more done about this. But that's a story for another time, or a CoffeeZilla video. Instead, the focus of this video will be on a group of internet gurus with much more influence, a much larger following, and much more credibility. The personal finance personalities. So, it's time to learn how money works and find out why you probably shouldn't be learning to work your money like these popular YouTubers might suggest.
Your thoughts so far, Paul?
I mean, so far I like it.
Let's keep going.
Now, I want to preface this by saying that I personally enjoy watching people like Graham Stephan, Andrei Jikh, and from time to time, even Dave Ramsey as a guilty pleasure.
From time to time, Paul. I mean, I would say a lot of people.
Listen, I've really bought into the whole Dave Ramsey.
He has helped a lot of
people. Has helped a lot of people. I just, you know me, I don't like it when he says something that's absolutely false.
Yep, let's keep going.
Yeah.
None of these guys are outright nefarious scammers, like the hustle bros you'll see pitching an Amazon automation course, and this automatically makes them a million times better than this other group. What's more is that they are genuinely entertaining. They give people a sneak peek into their own success while presenting relatively dry content in a way that is funny and easy to understand.
Wait, so he's pro Meet Kevin?
Well, you know,
I automatically don't like him.
The more we learn about this, you know, Meet Kevin was a real estate agent, so he's a salesman, and he's been selling.
So is Graham Stephan.
And Andrei Jikh used to be a magician, and I wouldn't say deceiving people, but sort of getting people to like them. And so you've done a great job not doing that, Paul, of course, but let's keep going.
So is that personal finance should be boring. There is a common saying that everything you need to know about personal finance should be able to fit on a postcard, and some authors have actually done it. But when you are committing to an upload schedule of 15-minute videos every single day, every single week, you are going to run out of things on that postcard to talk about.
Now, the great news is with our channel, we're always analyzing some specific stock or some specific piece of real estate that allows us to make a lot of content that's actually going to reiterate the things we discuss.
We have been saying the very same things for a long, long time about disciplined investing, looking at companies and with a fine-tooth comb and not keep buying into hype.
And that's the benefit we have, where we're actually trying to teach very specific things as opposed to the other guys. When you try to teach generalities, you do run out of content very quickly.
This is no good, because as these people will show you, they make millions of dollars a year from their daily videos. So they are not exactly going to turn around and say, oh well, I've taught you everything you need to know. So long and thanks for all the fish. Of course not. That would be silly. And I'm sure any one of us in their position would do the exact same thing that they are, which is riding that damn gravy train for as long as they can. But to do this, they need to create more and more.
My we have shown that that's not what we're doing.
I guess the funny
Remember how much we used to disagree on how we should do this channel? And I'd say, I want it to be something that I believe in, that I want to keep doing. And I'm not saying you said the otherwise, but you were more along the lines of, Paul, this is a channel we need to do.
But this is how other people are doing it, making successful channels. Now, all of us were successful prior to this channel. So someone might ask, well, why are you doing this? And it's like, well,
I enjoy it.
Yeah, me too. I mean, this is the best part of my week, is getting together with you guys and doing this. And I also have a job that's really...
You don't have a job. You have another business.
I have another business, a couple of them. We all have a couple businesses. And so,
I've got like 8 or 9. But
keep going.
And then what this postcard can hold. So they branch out into a few different broad categories: personal stories about their success, reactions, predictions, and making up new lessons. Now, to start off with, let's look at the least problematic of these formats: reaction videos. Reaction videos are everywhere on YouTube, and they get a bit of a bad rap. But when you think about it, this video format can range from absolutely terrible all the way to genuinely value-adding and informative. The videos that people like Graham or Kevin make are normally towards the good end. They will normally react to personal finance by watching video series like Millennial Money, or they talk about high-end real estate, which is obviously an area of expertise for these guys.
It's not an area of expertise for those guys. They're just selling it. They don't understand.
No.
Let's stop hyping those guys.
I mean, you do own some of those properties that look exactly like that video.
Idiots.
3 of them. So
idiots.
Keep going.
It's like Dave Ramsey, who will do live reactions to people that call into his show, and despite this being a bit repetitive,
Dave Ramsey went to Tennessee.
Oh yeah, he still lives there. He's huge Tennessee.
Yeah.
If you want to argue that these live interviews are not really reaction videos, just think to yourself: am I watching this to see a solution to the person's problem? Or am I watching this video to smugly partake in Dave's reaction to this person's situation? Even still, this is just a bit of light entertainment, and who knows, maybe we'll pick up a nugget of information along the way. No problems there, apart from when these reactions turn into predictions. Financial predictions are almost impossible to make. Even the largest financial firms in the world with teams of PhD quantitative analysts struggle to outperform regular market returns consistently.
But not for that reason, though.
It's therefore frustrating to see someone like Meet Kevin make predictions about the future of a highly volatile stock like Tesla before his audience.
Oh, I like this guy even more now.
Gives a standard disclaimer that this is not financial advice.
Of course.
Don't sue me, bro.
But when a supposedly reputable figure that positions themselves as a personal finance expert brings up an official-looking spreadsheet and predicts 100% growth within the next 12 months, well, it's not unrealistic to see how some of his impressionable audience would follow his not advice. Now, this is just one of the most blatant examples, but all of these personal finance personalities is guilty of giving this not advice pieces of advice throughout their content.
Why is every other channel
does
adamant about this not advice? We never say this.
Well, no, I just sit there and say, don't ever take one specific piece of advice. If you're going to do something with, based on what I'm saying, it's follow the principles of our advice. That's what I want people to do in the process. Apply the process to your kind of investments, because everybody's going to look at every investment differently. Warren Buffett talks about him and Charlie Munger. If you ask us to give an intrinsic value to Berkshire Hathaway, we're going to come up with different numbers. And they've been partners for 50 years, whatever the number is. You know what I mean? So we have to remember that. I don't blame, the guys are trying to avoid being sued, but they should try that because they're absolute morons and they really have no idea what they're doing. But so far, like this video,
this can range anywhere from invest into dividend stocks all the way up to buy a duplex and rent out the other side. Both pieces of advice are not necessarily bad, but are grossly overgeneralized and make no accommodations to the financial situation of their viewers.
I like that.
Now, my friend Richard over at The Plain Bagel actually made a video last week that explored the issue of picking stocks and why he doesn't offer stock picks. On its surface, this should be taken as a bit of wisdom, considering it is his literal career to analyze investments, and he also has taken the lucrative test to become a chartered financial analyst.
That doesn't mean anything.
I was actually considering not making a video after seeing that one because I thought Mr. Bagel did a pretty fair and well-rounded argument against all of this. But then I saw this. Alright, this is where the serious issue starts. Making up new rules for people to follow. I hate to break it to you, and I truly do mean this in the nicest way possible, but Graham Stephan is an ex-real estate agent and a social media influencer. He does not know the 5 best investments to make you rich. For that matter, nobody knows any investments that will make you rich.
I do.
If they did, they sure...
Investments that make you rich are the ones you pay the least amount of money for. And that's not what hype does. Hype tells you to buy the things that are the most expensive because they've run up the most. My statement's a very generalized statement, but the whole point I'm trying to make is the more you pay for something, the less money you will make in the future. The less you pay for something, the more money you'll make in the future. If you have a hard time understanding that concept, you need to get back to basics. You need to put all your money in an ETF and get back to basics and learn more about investing.
Yeah, well, I think we've taught the exact opposite of a get rich quick scheme. It's this might take 40 years.
It will take 40 years.
Yeah, absolutely. You're right.
Yeah. Be sharing them on a YouTube video. Despite popular opinion these days, good investments should not double overnight. They should instead continually provide value over many years or decades and return that value back to the investor over the same time period. The generally accepted rate of return for a well-diversified portfolio is anywhere between 6% all the way up to 12% if you are doing really well. The bad news here is that it's not going to make you rich, just like we said at the beginning of the video.
Yeah, it will. It'll make you rich.
It will?
Absolutely it'll make you rich. It'll take a long time, but it's going to make you rich. It's not going to make you rich tomorrow, but it'll make you rich 40 years from now. 100% it will.
Actually, it's not going to make you rich unless you have a decent income already and are very disciplined about consistently contributing to this portfolio over a long enough time period for compounded interest to do its thing. Even then, it will make you old and rich, which is not what people want.
Correct.
What they do want is to hear about how the people talking to them got so rich.
They got rich from advertising.
Yes, they did.
Last type of concerning content. Personal stories about their success. Now, who doesn't love a good success story? Especially when it's the tale of a scrappy underdog proving all the naysayers wrong, which is something most of these guys have.
You know, the more I reflect on this, we did a reaction to Graham and we liked it.
I like Graham.
It seems like Graham has sold his soul to partner up with these yahoos.
That's
for
the
more
problem.
Clicks. And I feel like, Graham, come on.
Show me your friends. I'll show you your future.
You're not going to watch this, but man, I just feel sorry for him. Why with these guys? Andrei Jikh, a magician, a real estate agent. I mean,
every Graham Stephan video I've watched, I've actually enjoyed his statements. I mean, the 5 things to get you rich, I immediately look at that and go clickbait.
I can watch him when they go 4 cameras, these 4 guys, Millennial Money, and I can see the look on his face kind of melting when Kevin gets into his Tesla predictions.
Do you think so?
I think you can see it. Just watch Graham Stephan when he's in that chat with 4 of them, and he can tell that they're all BSing him. Let's keep going.
Graham didn't get into college. Meet Kevin started from less than $1,000. Dave Ramsey went totally bankrupt, and the same is true for the rest of them. None are turning around and saying, I studied like crazy through high school, got into a good university, and became a doctor or an investment banker.
I'm a doctor.
Why?
Doctorate, sorry.
Well, because their backgrounds are much more relatable to the average audience.
That's true,
which
Paul.
makes achieving fortunes.
You're unrelatable, right?
Listen, that is true. I do understand that, but my process is not unrelatable.
Yeah.
You're 100%. I mean, guys, but remember, my family, we started as nothing. We immigrated to this country, and I hate the whole cliche of $3,000 in our pocket. We had nothing, and my parents, and if somebody, Tom Nash criticizes me for saying I came from money. My parents were successful doctors, but if I tell you the numbers of what I've taken it from to what, that doesn't happen from being an idiot. You know what I mean?
Yeah.
It happens from having a process. And this is, listen, personal success stories are awesome. But if you live and die by your I came from nothing and look what I made it, if that's your best argument for your process, it's going to stop working. Because what about your kids then? Your kids are doomed to be idiots then. According to your same thing, I always find it funny when I just look at this guy going, first off, he's going to be a lot less wealthy soon because he has how much money in Tesla?
90%, 20 million.
Is that what it is, really?
Yeah.
Doesn't he have margins?
That's what I hear through the Discord.
Doesn't he buy Tesla on margin too?
Yeah.
He does?
Yeah.
Oh, I don't know.
If that's the case,
let me preface that. All of this I'm hearing through people on our Discord. I'm not going in.
So allegedly, you're saying.
Moron. Yeah.
Now, it could be leverage because of call options and things like that.
Let's keep going.
All right.
Sound much more attainable. Now, that's not to say that these backstories are all a lie, but more so that they are just the product of survivorship bias. For every Dave, Graham, and Kevin, there are thousands of people that didn't have the unique set of skills and the luck to break into the incredibly lucrative roles they found themselves in.
Seth. Look at us. This channel was nothing just a year and a half, 2 years ago.
Yeah.
We had 87 subscribers. Now we have 61,000 subscribers. But because we have the survivorship bias of, we always talk about it here with Tim. Tim and I always talk and say, the reason we're going to win is because we're not going to stop.
Yeah, that's true.
How many people would have stopped? Seth, you would have stopped.
I was worried we were going to stop.
Yeah, but you would have stopped had it been your own channel. Yeah, it's like that's what everybody says. It's like Seth always brings up the statement of a friend of his saying, "Why do you guys keep making YouTube videos when they get 17 views?" Because I sat there and said 17 has to hit before we hit 1,700 and 17,000 and 1.7 million. That has to happen. So survivorship bias is definitely there.
Sure, Graham didn't go to college, but he did work his way into an incredibly prestigious real estate firm. So what he lacked in book smarts were obviously made up for with personal branding and good old-fashioned sales ability. If you are a fantastic salesman, then sure, go ahead. There is actually a widely accepted array of high-paying jobs with varying levels of effort to certainty. Sales sits somewhere towards the riskier side of this array. Something that is very high effort would be becoming a surgeon or dentist. It takes years and years of medical school, but once you are practicing, you are all but guaranteed a high income and a standard of living for the rest of your life. Of course, at the other end of the spectrum is something like becoming a rock star, famous actor, or even a YouTuber. It doesn't take too much effort when compared to years in med school or 100-hour weeks in an investment bank, but it's also incredibly unlikely to pay off. Whether they do it intentionally or...
So we're going to be YouTube celebs, this is very low likelihood. Like, I look at it going, no, we were going to hit it. Like, I never doubted we were going to hit it.
You didn't.
I didn't ever doubt we were going to hit it.
You kept paying me and you kept paying Don to come in here and talk to ourselves for years.
I never doubted it. I was like, yeah, we'll hit it. Yeah. All right, keep going.
Not, the personal finance personalities perpetuate the narrative of dropping out of school and building your own destiny, which has worked well for them, but will not work for most people. It also sounds eerily familiar to the promises made by the more despicable side of the financial gurus.
Drop out of college.
Now, there is one last problem with all these personal backstories, and that is that they are used to justify all these other pieces of content. To demonstrate this, we are once again going to pick on Meet Kevin. One of his most popular videos is a tale of how he built up his property portfolio from $0 to $5.5 million by the age of 27. You are welcome to go and watch the video, but the TLDR is that through a series of flips and equity releases, he built up a highly leveraged position of real estate assets that were cash flow positive. Sounds great, but it is incredibly risky. Take a 5-to-1 leverage position in the stock market, and most people will think you lost.
I'm willing to bet a lot of money he does not have a high cash flow positive real estate portfolio with high leverage, especially in California. I remember showing California people my real estate portfolio, them saying, how do you not have 100% finance then? You should get that all day, because they're not used to those numbers. I don't believe that for a second that he has cash flowing properties with high leverage in California. I know people in California who go, yeah, I got to basically pay cash or put 60% down payment to get cash flow.
Holy.
Oh yeah, 100%. Well, when you have to buy a house for $2.5 million, it gives you.
But I don't think about it in that regard.
You're banking on you're banking on appreciation.
Nuts. Yeah,
of course.
Wow.
But
take a 10-to-1 leverage position on a house, and you're an investment genius. Most people don't realize how risky real estate can be. Now, of course, Kevin was lucky. He started investing at the start of one of the longest real estate bull runs in history, and in his defense, he has since leveraged his position significantly. But this is the definition of survivorship bias. Nobody is going to make a video of how they lost their life savings trying to flip homes. Had Kevin started his investment journey in 2004, he certainly wouldn't be telling stories of financial success on YouTube.
Correct.
If anything, he would be lucky to be an extra on The Big Short.
You just keep going to the bank and you ask for more money. Hey, there's a bubble.
Now, if I sound overly cynical, let me follow all this up by saying that given the opportunity to make as much money as these guys are by uploading videos to the internet, I would sell out so damn fast.
Sometimes YouTubers can sound like salespeople.
But they are still selling something. It might not be a course or an AI that can trade Forex for you or even a book, but they are selling you to keep on watching.
By the way, what are we
Bleak
selling?
Realities about
We're selling software that helps you understand processes in financial state. I have no problem if that's my sales pitch.
Yep.
I love it because to me, it's making everybody smarter financially.
It's a calculator. It's a calculator.
That's all it is.
It's a calculator app.
And we're selling exactly what people ask for. It's not like we're sitting there pushing it. Literally, it started from people going, how do I get that software? That's what it started. I'm like, oh, we should make our own software.
Interesting.
the tough road to reliably create wealth doesn't quite grab the attention like an open mouth and flashing
headline. All right, we're done with this video.
But in a world where attention
I think it's a great video. I think it's a great video.
Yeah, I have never seen one about actual YouTubers, and
he's absolutely right. Survivorship bias is a big thing. If Meet Kevin had started in 2004, he would be doing something totally different. Of all these stock guys that started in 2004, 2005, totally different situation.
Hey, I think that the guys that started that are doing it now, in a couple of years, they might not be doing this.
There's 20 more seconds, Paul.
Oh.
currency, you should spend yours wisely.
Watching this video, you're still like, all of this guy's investments is because of his YouTube money. You're 100% right.
Anyway,
that doesn't bother me.
Not at all.
That doesn't bother me. I don't mind that he makes money off YouTube. That doesn't bother me at all.
Go make more.
Yeah. I have a problem when you say that Bitcoin's going to go up 19% a year, and for the rest of the time, in 40, 50 years from now, it's going to be bigger than the U.S. economy. You don't realize that's what you're saying.
And you use the word obviously over and over and over.
Yeah.
Then backtrack in the last 20 seconds of the video. Yeah, for sure.
In their footsteps.
Who's she?
Follow
Hi.
that all up by commenting how dumb I am on this video and watching our video on what to do next after making a few $1 million. If you did enjoy this video, please consider liking and subscribing.
Interesting video.
That was a good
Interesting
video.
reaction.
All right, how many subscribers does he have?
Oh, gosh.
Let me guess this one. 175.
Oh, no, I think more than that. I'm going to say 750.
750,000?
Yeah.
He's got 81,000 subscribers.
Oh, wow.
Well, obviously, this is against the grain. I mean,
That was my thought. I didn't think that he was going to...
But we're against the grain, but we're still growing. We grow faster than the other people who have hundreds of thousands of subscribers.
That's true.
And we're against the grain.
Did you guess
750.
Jesus.
Well, what's wrong with that guess?
Well, I mean, when you're making videos against Graham Stephan and me, Kevin, and Andrei Jikh,
So here's what I'll say about this guy. We've watched one video of his. There was another person we watched one video of. I was like, oh, this isn't bad. And then I was told later that was probably their best video, and I would actually hate that person's views. I like this person's views. I hope they do better. I hope as long as their other videos are consistent like this, that they do better and better.
Thanks to our patrons for suggesting videos. If you want to join our Patreon, the link is in the description below. You can get our software, which is incredible. And beyond that, we're not selling anything. Anyway, that's our take. Thanks for watching the video, and we'll keep the reaction videos coming. As always, we welcome you in as a part of our community. And final thumbs up on the way out. See you next video. Love you guys. Appreciate it.